Hello everyone and welcome to the next episode of In Talks with JD. In this episode I'm delighted to be joined by the star of LinkedIn, the one and only David Coleman, Head of Sales at Positive Lending, and also the fantastic Oliver Smith, National Account Manager at Vida Homeloans. And we're going to be discussing all things specialist lending. We are all very aware of the challenges that have faced our customers over the last few years. Rising costs, rising interest rates, but how has this impacted the specialist lending market? And what do they feel 2024 will bring? Find out next. David, Oliver, welcome and thank you for joining me today.
Thank you.
So before we go into more of the specialist lending stuff, I want to understand your thoughts on where you think this year will go. So what are your thoughts on 2024? So David, I'm going to come to you first.
Well, if it's going to continue in the fashion that the year started with, it's going to be busy. There's definitely a lot more activity in the market, which is encouraging to see after everything that happened last year. I know you said we're going to wait to go into specialist lending, but I think a lot more will fall into specialist lending simply because of the demographic of the client in the market at the moment, the restrictions, the hurdles that everyone's facing, and actually the specialist lending facilities that support those clients.
Okay, cool, fantastic.
Yeah, so I echo a lot of what Dave just said there. I think if it carries on the way it has been, I think it's going to be a very good year. I think it can only be improved upon from 2023, that's for sure. I think more people will be fitting within the specialist market now more than ever, which is obviously why we're here today to put our views on it. So yeah, okay. Hopefully a lot better than 23 anyway.
Cool. Do you feel that maybe there's a little bit more positivity out there at the moment?
Absolutely. Yeah, I mean, look, if you look at the rate wars that are going on with lenders, that's definitely driven activity in the market. There's a lot more green shoots, a lot more positive news coming up. Last year was like rates are going up, cost is going up, can't get this, can't do this. But now, you know, rates as much as they aren't where they were before, we're probably never going to see that again. But it's a lot more encouraging that rates are there, and that's reflected in the specialist world as well, because it all goes hand in hand.
Okay. I agree. I think it's more about the stability piece of, I think rates have found where they're going to sit now, which in turn drives consumer confidence, which obviously then allows people to be hopefully in a more proceedable position to move forward.
Okay, cool. So David, you touched on specialist lending is going to be a big part of this year. I mean, surprise to specialist lending people here. But just for those watching, what is specialist lending? And do you feel that you should be viewed in a different way to the rest of the market?
Viewed in a different way, no, not as such. I mean, specialist lenders do exactly that. They do specialist lending, so anything that falls out your typical high street, mainstream borrowing facilities. So, you know, as a business, we're multi-product, so we cover all different product ranges. But if you look at a first charge mortgage, for example, the demographic of client in the market now that is struggling with affordability, there is definitely more adverse in the market. I think we will see that increase, sadly so, throughout this year and going into next for sure. And where mainstream lenders don't have an appetite to support or can't support those clients currently, whether that changes we'll see, then the specialist lender will come in to save the day. They say every year it's going to be the year of the specialist mortgage. This could actually be the year.
Yeah, well, here's to hoping. I think specialist, it's so broad. So much can fit within that, whether it be first charge, second charge, it could be short-term lending via a bridge, it could be credit impaired clients, it could be quirky property. It's so broad in terms of what fits within it. I suppose the blessing within specialist is the multitude of specialist lenders that fit within that. And we all do our own niches of where we can help individual parts within the specialist market, depending on risk appetite and sort of where we're hedging and what we're looking to do within the market. So it's very broad, and I think specialist is probably the right terminology because, like I say, it covers a whole host of different things which each lender can hang their hat on.
Okay. I think it's clear that we've seen the high street lender maybe trying to be more innovative in the market. So do you think that the lines between the specialist stuff and the high street is blurring, or do you think there's still a clear line?
I think it possibly was looking that way, but now I think it's separating. The high street appear to have more of an appetite for, if it fits in the box ticket, yes, great. If it falls outside of that, I mean, a good example of that, if you're self-employed, there are a lot less options in the mainstream world than there are in the specialist world. And a self-employed client is viewed typically like an employed client. There's more rationale and options for those type of clients. So I think a lot of the times when you look at specialists, people go, oh, it must be adverse, there must be a problem with it. Actually, no, it's just the client's demographic that just doesn't fit the mould for mainstream lending.
Okay. Ollie?
Yeah, I agree. I think when you're looking at the big 6-7 high street lenders, they're probably not really in the same appetite space as the true specialist lenders. I think there is quite a dotted line between the ones that want to dabble in it. You've seen a lot of building societies coming into space of helping some clients who are credit impaired, or they might be able to help with some quirky properties which a high street might not be able to do. So, you know, you may find that they fit between the hardcore, real specialist lenders, the high street, and then you kind of see those in the middle. So there's a dotted line, but, you know, I wouldn't say the big 6-7 would entertain much of what the specialist lenders are doing at the moment.
Okay, cool. I want to move now on to home ownership, so specifically first-time buyers. We know it's built into the British DNA, the goal of owning your own home. How do you feel the specialist lenders can support this, maybe more than ever, especially for those that maybe believe it's just a dream that's just too far away?
I'll let you go with that, Ollie, first.
Yeah, so I think one of the key things, especially when we're talking about first-time buyers here, is mainly around loan to values. And I think the biggest struggle for any first-time buyer right now is point of entry to the market. Deposits are a big problem. So what you're really looking for here from specialist lenders is innovation around how can we help these clients with deposit sources. Are they coming from friends, family? Is it coming from some sort of new build scheme? There's a lot of specialist lenders entering some more of the wider new build schemes now. Help to Buy has been pulled. So I think there's a lot there to help the clients. It's nowhere near where it needs to be, certainly, but I think it's really getting that point of entry to the right place. And a lot of lenders are increasing their loan to values now, which hopefully in turn make it possible. You're then weighing up the issue around affordability though, in terms of, because we're increasing the loan to value, the rate goes up. Is that monthly payment now affordable for you? And that's a question that they need to be able to sit down and go through with a broker with a full income and expenditure.
Okay. David, do you see anything specifically with the lenders that you deal with in regards to just helping that first-time buyer?
I mean, the stuff that we're kind of seeing coming across is clients that have maybe had damaged credit historically. It's all satisfied now. It could still be live as well, so there's a mixture of both. But also different income sources. We live in a world now where not everyone just has a 9 to 5 PAYE job. Maybe there's a second job, maybe there's a third job, maybe it's sole trader, maybe it's day rate. Areas like that where, you know, numerous types of income have to be considered or should be considered to make the deal work. Yeah. And as Ollie's touched on there, the higher loan to values, the USPs around the product that push where maybe a more traditional lender isn't able to facilitate it. Those kind of bits where all of those factors can be considered are helping more clients get on the property ladder. Okay,
cool. I want to touch now on the shared ownership bit. We've seen a definite uptick in that over the last year or so with affordability challenges, etc. What are you seeing within the specialist space?
More lenders wanting to get involved with it.
Okay.
Yeah, for sure. Absolutely, yeah, definitely. Well, the more lenders on there, the more consumer choice, the more consumer options, more deals you can place and help more clients. So, but the fact of it is where you can enter into an arrangement like that is going to be more achievable for the client. You know, if they've got the ability to purchase more of that property going forward. But again, you know, there was a deal we completed for a Just Mortgages broker only a week or so ago. That client had numerous points of adverse credit, all historic, but was turned away from the high street. Also, deposit wasn't strong enough, affordability, all these areas around it. Basically, it was turned away from other options. So we had a lender who could facilitate it and help them get on the property ladder and achieve that property.
Oh, fantastic. All right, I want to move now onto the buy-to-let space. We know it's been a really tough arena over the last year or so. Where are you sitting to support that now, to help that new landlord or existing landlord going forward? Ollie, I'll come to you first.
Yeah, definitely. So I've already mentioned innovation. I think that's a key thing within the buy-to-let market. We've had to see lenders get quite clever around how they can lend to clients. I think the biggest barrier there is purely around the stress testing and is it able to fit. So whether that be clients are changing the traditional buy-to-let, it could be a 3-bedroom home into a HMO and then doing a multi-unit, driving a higher yield, therefore then overcoming the stress test hurdle. But what is positive going into this year compared to last year is rates are on a downward trajectory at the moment. You're also looking at the size of the market. There's just over 250,000 buy-to-let mortgage maturities this year. So that in itself presents an opportunity around where are these going to go? They're there, they're ready, they're there to be, helped right now. So what's that going to look like? Is it going to be a PT? Is it going to be a remortgage to a different lender? Or is it going to be a change of type of use? Is it going to turn to a multi-unit block or a HMO? So I think there's a lot of things that it can go in the direction. Will it be as good as previous years? I don't know. Will it be better than 2023? I certainly hope so.
Okay. David, better or worse?
It's got to be better. It's got to be. But yeah, I touched on what Ollie just said there. We've seen a lot more short-term bridging finance being used to adapt or convert properties to achieve stronger higher rental yields, make it actually a financially beneficial situation for the client. The stress is the biggest thing, really, is the affordability. If it's not passing up, that's what killed the market, really. But I think landlords are now either looking at how they can adapt to continue having that property as investment, or they've been offloading that property because actually it makes no longer financial sense. But if the landlords are offloading properties, investors out there that have the money, or again might be using short-term finance, are acquiring those properties and adding them to their portfolios as a professional landlord, and those properties are coming back in.
Okay, cool, fantastic. So as we close part one, hopefully we've got lots of brokers watching this out there. What would you say to the brokers watching this?
My message, as it always is be open-minded to other stuff that's in the market. I mean, I think historically, when rates were good, money was good, the world was a better place looking. There was less call for the second charge mortgage. There was less call for bridging finance. There was less call maybe for the specialist first charge. There's definitely more call for that now, and I know that my team and I are definitely busier than ever going to visit brokers, their teams, their firms, to talk about these solutions, because actually they're finding more and more of this stuff doesn't fit with their traditional options, and they need to educate themselves a bit more of what's available so they can support their client bank.
Okay, cool. Ollie, do you think then, just touching on what David said, do you think maybe there's still it's a specialist lender, I don't want to go down that route, I can't go high street, so no, it's just not going to work?
Yeah, potentially. I think specialist lenders are so much easier to work with than ever before now. Criteria is readily available through different criteria sourcing platforms. I would just say leave no stone unturned. If you don't already work with a packaging partner like Positive Lending, absolutely reach out and spark up that relationship, because they're experts in what they do. And actually, before you give that client a final no, let's talk to a packager and look at all opportunities available to see what route it might go down, because it may well be it doesn't go down the traditional route that you're thinking of, but there is a way of still helping that client potentially.
Okay, cool. Thank you. Well, that brings to a close part one. In part two, we're going to move away from the first-time buyers and talk more about current homeowners and how specialist lenders are supporting them. See you soon.